All right, so we'll go ahead and get started. If we're still got people connecting, that's fine. We'll admit them as we go. But so welcome. Thank you for joining us today. My name's Kayla. I am the manager of our agent support team at Star Title. Here with us today, we've got Leanne Truxton. She is one of our senior title examiners. We have Deb Wilson, who is our operations manager. She oversees the post-closing and recording department as well. And then we have Eileen LaPlante. She is the vice president and oversees the closing team. So,
yeah.
Good morning.
Super excited to have everybody here. It's been a while since we've been able to do one of these presentations. So, really excited. Thank you again for joining us. So the goal today is to have. We want to have a conversation, and there are a lot of people here with us. So we did ask that we have the cameras turned off and the microphones, but we do want it to be interactive. We want to be able to answer your questions. So in Zoom, there is a chat box feature. It should be along the bottom in your toolbar. If you click your chat box, you can ask whatever kind of questions you have. We'll be watching it throughout the presentation. And it is going to be interactive. So we're going to be asking questions as we go too. So please participate. We want it to be fun. Certain parts are intended to be funny, so feel free to laugh. So we hope you get something out of it. We want you to have a good full picture of the title process and kind of what all it entails. I think oftentimes there's a misconception that, you have a sale that goes pending, we're going to go there to close, we're going to sign documents, exchange funds, that kind of thing. And that's all true, but we also are offering a service. So title insurance, I think as a whole, sometimes is a little bit hard to explain, especially to maybe first-time home buyers. Well, I mean, and just the general public probably doesn't have necessarily a great, an understanding of what title insurance is. So again, feel free, please use the chat box and we'll go ahead and get started. All right, so first things first, agent support will be the first team that you come in contact with at Star Title. We'll be with you from when the sale goes pending all the way up until it's scheduled. At that point, we'll introduce you with to our closer. And we're really like your full service, like customer service support team. So we're there for you, we're there for your clients, we're there to answer questions. We work with you throughout the title process, clearing, the title requirements on the commitment, which we'll talk about a little bit more as we go. But we really want to be an extension of your team. We don't want you to think of title as a hurdle, as a roadblock, as an obstruction. Like we're all working toward the same goal. So that's what we're going to kind of discuss a little bit more today. All right, so first question, and I am looking for your participation here, so please use the chat box. If someone were to ask you today, what is title insurance? What would you say? You might get some looks from your customers. Maybe the look of confusion. Maybe this is how you would look at them. Okay, we've got chain of ownership. Yep. Give everyone a few minutes to answer here. Okay, so let's see. Title companies ensure a clean transfer of title. They check to make sure the seller has the right to sell. Yep. Title insurance is the assurance that you will be purchasing a property free of liens. Yep. I explain that is a search provided to make sure that they aren't anything attached to the property to ensure it can be transferred. Yeah, so the goal really is yes, to make sure you guys are hitting it on the head here, making sure that the chain of title is free and clear of any defects. So title insurance does provide proof of ownership, right? Who has the right to sell the property, protection against title defects, confirmation of the property being conveyed. So whether that's what we mean by that is we want to make sure that we're transferring the right property. Not all legal descriptions are necessarily as self-explanatory or clean as you might think. So we want to make sure that we're really, making sure we're selling the right property. And then verification that the property is free and clear from any liens or encumbrances. So exactly. Okay, so why is it important? Biggest thing, so for protection against outside claims that may result in financial loss. So I have an example here. It's a pretty generic example, but honestly, we've seen it happen before. So let's pretend John is our buyer. He's looking to purchase, maybe a vacant land parcel. He finds a for sale by owner in northern Michigan. John calls the seller, and seller's in quotes there because we don't know for sure yet. So he sees the property, they agree on terms, they shake hands, he gives the seller the money, the seller hands him a deed to the land, done deal, right? There shouldn't be any problems. Maybe. So without title insurance, you don't necessarily know for sure, if you are dealing with the correct person. So what John didn't know is that the seller was actually the granddaughter of the recently deceased and actual seller. We'll call her Sally, being her estate. So the estate hadn't gone through probate yet. There was no personal representative established, and the seller had no right to sell the property legally. So this is an extreme example, but it does happen, and it's really important. Sorry, Aileen?
And it has happened.
It has. So it's really important to establish, who the correct seller is and that they actually have authority to sell the property. All right, so the process. This is just it in a nutshell. So property goes pending, let's say estimated closing dates in 30 days. You'll send the new order into Star Title. We've got our order's email address at the bottom of the screen there. The search and exam team, so Leanne's group, does the researching of the chain of title. They're the ones that kind of dig in through the old records. They analyze, research, all that kind of stuff. Then they produce our commitment. So then your agent support team, does the processing, works with you and your customer, and works through clearing title, excuse me. And then we get to the point of closing day. That's when everybody's excited, right? That's definitely the goal. So, all right, so connectivity, just a little bit more about Star. Obviously, we're available by phone, email. Loop is a huge resource for us, as it is probably most of you. One thing that I want to explain, if you add us to the team, it gives us full access to your loop. So we can go in, we can check for any addendums, invoices, your contacts, whatever may be in there. It gives us, just the full view. So it saves a lot of emailing back and forth. It saves on a lot of time. So it is there as an option if you want to utilize that. Then we have our office locations. So we have several offices throughout the West Michigan area. We're in Ludington, far north is Traverse City, and we're continuing to expand. So just know that we do have a lot of office locations where we can service you and your clients. Excuse me here, just 1 second. We've got a couple more people joining. Okay. Oops, sorry about that. Okay. So now we're to the title commitment. So just a quick breakdown of what to look for. It's broken down into, I guess, 3 primary sections. We have Schedule A, Schedules B1 and B2, and then Schedule C. We're going to go over what each of these includes, but keep in mind that a title commitment is not the policy of title insurance. A commitment is an offer to issue a title insurance policy in a certain manner when the requirements are met. So it's basically, us saying, hey, once these items are satisfied, we can look toward issuing the policy at closing. All right, so Schedule A. That's going to include the type of policy, whether it's a homeowner's or a loan policy. It's going to include who's the proposed insured on an owner's policy and a loan policy. You'll see here that the proposed insured on the owner side is actually the buyer of the property. It's not the seller. The seller is providing, the buyer title insurance in most cases. And then a loan policy insures the lender. It's also going to include the amount of the policy. So if it's an owner's, you will have the owner's policy is the sales price. Sorry, we've got more people joining. Here we go. Okay, so the owner's policy is the sales price, and then the loan policy is based on the loan amount. It's also going to include your vesting. So that's the name in which title is held and who currently owns the property. All right, so the commitment, the requirements, Schedule B1. That is probably, if you're going to read anything on the commitment, I would recommend that you read Schedule B1. That tells you all the things that are needed in order to clear title. So they must be addressed prior to closing. There are standard requirements that are state or underwriter specific, and then property specific requirements that pertain specifically to the property being sold. It's going to include your tax amounts for each parcel being insured. And then examples of property specific requirements, which Leanne will also talk about more, but these could be things like certificates of trust to be recorded, LLC organization documents, mortgage payoffs are probably the most common one that we see. And then, so I want you to think of this as your checklist. These are the things that we have to check off, right, before we can get to closing. So once all these requirements are met, once the lender's good to go, we can look towards, scheduling a closing. And again, for those that just joined, feel free to use the chat box if you have any questions. We are watching it as you go, or as we go. So feel free to jump in and ask any questions. Interrupt us, I guess, is what I'm saying. All right. All right, Schedule B2. So these are your exceptions. This lists any items accepted from coverage, things that Star Title will not cover. Examples of an exception are a lien or easement that are not a public record, assessments not due or payable at the time of closing, maybe common areas or elements of a condo, and then property specific exceptions of record or not. So there are certain things that title insurance does not cover. And then Schedule C is your legal description. So this is describing where the land lies that's to be insured. It includes the municipality, the county, and the state. And then, yep, so again, the legal description describes where the land physically lies. So we talked about it just for a second earlier, but you'll often see like lot and subdivisions if they're platted, unit numbers if it's part of a condo, meets and bounds. That was the one kind of in our example about John wanting to purchase that vacant land from the for sale by owner. The meets and bounds descriptions are not as clear as the lot and sub or unit condo numbers. So definitely important to to make sure that you're reviewing those legal descriptions. I am on the east side of the state. We've got a question here. I'm on the east side of the state. Will you do closings here? So yes, depending on how far east, we don't have a huge footprint on the east side of the state yet, but we can work with you to arrange for a mobile closing. So we'd have a notary lined up to meet with you or your customer. So certainly an area we're looking to expand in more, but we are able to conduct closings there, yes. All right. That brings us to Leanne.
So I'm on the exam team. We search the public records and our searching platforms to gather all the information in regards to that property. Once we have all that information, we'll go through it, scrutinize everything, and we'll come up with who owns the property, any liens that are on the property, and any exceptions that we need to show. And that's when we create the title commitment. Some of the common requirements that you'll see, if there's a LLC or a corporation in title versus, a husband and wife, we'll ask for the entity docs. And that'll tell us, who can sign, who can't sign, how many people need to sign. We'll go to the LARA website, which shows all the legal businesses in Michigan, and we'll pull their good standing, make sure they're, they pay their dues with the state and stuff. We'll review the articles from when the company was created. Some other common requirements would be proof of identity. So, for example, if Mary Smith took title and Mary Jones signed the PA, I would ask for the identity of her having a different name. So either she got married or she got divorced. So the proof of identity would be the marriage license, a judgment of divorce. Speaking of divorce, if there is a divorce, if you know that your sellers are divorced, we're going to need a copy of that divorce to review. And that would be one of our requirements on the commitment. Sometimes we need court orders for various reasons, and those would also be requirements on the commitment. Lots of people have been putting their property in trust. So one of the requirements would be for us to review and record a certificate of trust, excuse me, and that'll tell us, who can sign that deed. We will need the original at closing to record. The proceeds will be issued to the trust. The bank account must be in the name of the trust. And this is what is governed by the state of Michigan, what needs to be on the certificate of trust. And you can read all those at your leisure. That's still part of it.
Okay.
What was that? Other requirements would be on mortgages. Most people have a mortgage on their home. So we would get a payoff authorization signed by the seller, and then we would order the payoff statement and pay that mortgage off at the closing. Sometimes, not always, but someone back in title, their mortgage was never discharged. It was discharged, it was paid off, but the lender never recorded the discharge. So if you can ask your seller for their owner's policy from when they purchased it, that'll help clear that up. And another thing on the owner's policy, when you get that listing, if you can ask for that owner's policy, that's going to speed up our searching process.
Leanne, we got a question here for you. So just in general, does a trust expire?
Well,
it's not necessarily an expiration, but the conditions of the trust can change. If like one of the original creators of the trust were to die, there would be provisions in the trust as to who can sign once that happens. There are some very old trusts out there, but a certificate would be required to state that the provisions and the powers in that trust are still in full force and effect.
Thank you, Eileen.
All right, wonderful.
Vesting in deeds. So fee simple is the highest degree of ownership which a person can have in real estate. They are the owner of that property. So what do you do if your vesting doesn't match who is your seller? So you sign the paper with Mary Smith and you get your commitment and it's showing George Jones. So what do you do?
Feel free to answer in the chat box. This is one of the interactive questions here. What would you do if the seller that you've been working with isn't listed as the seller of the property?
No guesses?
Call the deal doctor. I like that. Yes, Don or Eric helped. First, talk to that person to see if there's an explanation. Yep.
Yeah.
Maybe there's a trustee. Yep, call deal doctor, call us. That's kind of, I think, what we were looking for. Yep, call us or the deal doctor, find out what the procedure is.
So the best thing to do is when you get that listing is to, ask them if they own the property. You're opening up a conversation with them and they're going to say, no, it was my dad's property and he passed away. Or, it was in my uncle's name and I'm the trustee and my uncle passed away. Or ask those questions because that way there's no delays.
One thing I just want to mention here too, and you've probably seen this sometimes, is do you ever see it where you're doing like your pre-listing work? So you're doing your net sheet and you're pulling the property information. If you ever see like on BSNA, so the public municipal website, sometimes the seller will be listed there as a different name. Maybe it does say it's a trust or an LLC, and you're thinking, okay, I'm working with David. Who's David then? And how does he play into this? So those are good kinds of questions to ask up front, as Leanne said, because there's usually an explanation, but we do certainly need to know what that is.
So there's different kinds of deeds. If they're going to get title insurance, your buyer's going to get a warranty deed. And that's conveying title from the grantor, the seller, to the grantee, the buyer, and that it's free and clear of all title defects. Sometimes you'll see quitclaim deeds. And when you see a quitclaim deed, that is just like conveying any interest that the person has. So if John and Mary were divorced and Mary gets the property, John would have to give Mary a deed, and most likely that would be a quitclaim deed, and that would be one of our requirements on the commitment. The ladybird deeds, we're seeing a lot of those for people who are doing estate planning. And usually that, they're holding title, as an individual or a husband and wife. And in the future, if anything happens to them, if the property is going to go to, say, their son. So but they would help retain a life estate. So on the ladybird deeds, they can sell the property. But if they died, then automatically the property would go to whoever they said to in that deed.
Yep. We do have a question really quick going back to trusts. It's, do you want to request proof that someone is a trustee?
So we would ask for the certificate of trust, and that will show who the trustee is.
Yeah, so the certificate of trust is the proof then?
Yes.
Okay.
And they're working in a fiduciary position, so, you know, they shouldn't be lying or anything.
Right. Let's hope.
Was there any questions for exam?
Okay, I guess we're moving on to closings. The closing department takes their hand off from the agent support unit after they have worked with you and gathered any information we need to get to the closing table. They pass it to the closers and they begin working up the settlement statement. And if you have a lender, working with a lender to facilitate getting the CD and the lender paperwork coordinated.
Right.
What does clear to close mean when you receive a clear to close? That's kind of a more complicated question than you might think. There's various degrees of being clear to close. There's the title aspect of being clear to close, meaning that we've got title in the name of the person who's listed on the purchase agreement as the seller. We've got any kinks worked out there if we needed death certificates again, or a certificate of trust, judgment of divorce, things like that. Then there's the lender clear to close. They have their underwriting and you know, the financial documents gathered and things like that that the lender needs in order to approve the loan and get the people to the closing table. They're not exactly the same set of requirements. So be careful when you hear clear to close that everybody's clear to close, not just one side or the other. That's very disappointing when we get a closing on the calendar and we find out that we're really not able to move forward because one side or the other was still missing something. And then in our market, we also have the split closing aspect that we'll touch on a little bit too, that we have another title company typically involved that we have to coordinate with them, and they may have some additional requirements that we need to make sure they're clear to close as well. Once the sale is scheduled, the closer will begin working on the closing documents, as we stated.
Yep. And real quick, Eileen, before we move too far, we do have a question here. So one of the big lenders in the area informed me earlier this year that for their company, clear to close does not mean it's ready to schedule closing.
That's very likely true. That means that they've got their aspect of it as completed as they can make it, and all parties need to coordinate. We've seen that as well, that a lot of times we're with scheduling that people are running much and much closer. The lenders don't want to even finish their aspect of the work on it until the closing is scheduled. And then it's kind of a rush to the finish line if things come up once it's scheduled that they have to deal with. So clear to close is a little bit more gray area than what we would like.
I think especially since you know, things have changed and honestly escalated somewhat since the pandemic started too, has changed the timelines that we work. Things are moving very quickly, and the processes have changed, you know, somewhat as well. So I think you're right in your statement there that things have changed within the last year or so.
Once the closer has your preliminary settlement statement worked out, they'll send that out for reviews. But when you get that, look that over, make sure everything's on there that you know about. Again, in the split closing situations, we're coordinating with another title company. We're balancing to make sure that we've got all the same fees and everything is as it should be. Sometimes tax prorations can be a little bit of a sticking point because depending on what computer program you're using, you can be off pennies when you do your tax proration. So at that point, they'll balance that information depending on whatever rounding factor is in your system. And again, if it's the buyer's side, we'll be working with the lender and the customer to make sure that they're ready to close. Same thing with the seller. We verify with them how they wish to receive their funding and things like that, whether it's a wire, whether it's a check. Those are always questions that we try to know ahead of time so there's no confusion at the closing table. Taxes are prorated. If you're in an area where it's on the calendar year, that needs to be agreed upon in your purchase agreement. That's how the West Michigan purchase agreement reads, but there are other areas of the state that aren't the same. You know, sometimes it's a fiscal year, sometimes it's a calendar year. Here, seller is responsible from January 1st through the closing date. Buyer is responsible from the closing date through the end of the year. And then you've got the fiscal year aspect of it. If you're in that kind of area where they go like from July through June, whether it's in advance or whether it's in arrears. I worked over on the east side of the state for many years, and there's counties that abut right up to each other, and they have completely different methods of proration, but it's whatever the local custom is in that area.
That's also something too that the title companies, so we know where it comes from, there's a portion of the purchase agreements that will tell us what the tax proration is to be based on. So whether it's calendar year, fiscal year, in arrears, or in advance. So all of that is dictated in the purchase agreement. So that's what the title companies are looking for when they determine how they're going to calculate prorations.
Exactly. And then again, when we get to split closings, we handle that fairly often in this area now. It's more usual than not that we're splitting a deal with somebody else. So we need to keep that in mind when you're planning these things. Buyer handles one side for their company, seller for theirs. And the disbursement typically on our side of the state is handled by the buyer's side because they're the one gathering the funds typically from the lender. And when we come to seller proceeds, a lot of times if we had the seller side, we still need to wait for the buyer's side to finish. If there's funding approval, we need to wait for that. We're really not in full control until such time as the other title company tells us they've gotten lender funding approval and that funds are available to be released.
I think this is sometimes too, while you'll notice when you're scheduling closings, especially if it's a split closing, oftentimes the seller wants to sign after the buyer, and sometimes several hours after the buyer, to make sure that they can get those funds at closing, that they're not still waiting for funding approval from the lenders and things like that. So I think that's where, if they're closing separately, it is important to know, when the other side is signing, so we can coordinate the disbursement, direct or accurately.
Yeah, and unfortunately, there's not a real solid timeline for funding approvals. It depends on how busy a closing day it is for the lender too, whether they get their stuff reviewed and can let us know that we're able to release funds. We try to do it as expediently as possible, but everybody needs to understand that we're working with others and not completely in control of that process. We do our best, but sometimes it gets delayed through no fault of ours.
We've got a question here. So does this work the same with cash deals?
Cash deals are great. We're completely in control of those. All we have to do is gather the money.
Yeah.
There's not really a way to split a cash deal. So.
Right. Cash deals are typically handled by the same title company. So because there's no loan policy to be purchased, the buyer is provided their owner's policy, typically by the seller or whatever the purchase agreement states. So usually everybody closes together on a cash deal.
They don't have to be in the same closing room together. We can do them at separate times, but it's generally with the same closing company.
Yep. Okay.
Incoming wires. Prior to closing, the buyer will need to obtain their cash to close. And we need that in certified funds, and that's either certified check or a wire. The check needs to be payable to Star Title. If they're sending in a wire, we'll have wiring instructions that we can get to the client so the wire can be received within our bank. We always try to make sure that the lender has our wire instructions as well, because they wire in their loan funds in addition to any buyer's funds. The lenders are typically now wiring all our funds. It's rare now that we get a cashier's check from a lender.
Yep. And really quick, going back to cash deals for just a second. So to clarify the question regarding how disbursement works for cash deals, he had also asked if the seller has to sign before or after. So when it's a cash deal, typically still the seller would want to sign either at the same time or after the buyer. We can't disperse until all the documents are signed and the originals are received. So we want to make sure we have those in hand before we're issuing funds out to the seller. A follow-up question to that was who gets to decide what title company to use when there's a cash deal, the buyer or the seller? and I'm going to use a conditional word here because the second I say usually, like, I'm going to say usually the seller, that's my answer, but I can't say that is the case in every instance. Usually it's talked about beforehand, but most of the time it's it's the seller because they're the ones purchasing the policy. So that's kind of just the unwritten rule of thumb. But again, conditional words most of the time and usually the seller.
Yeah, that can all be discussed amongst the parties and decided upon. At Star Title, we can accept an ACH, cash, Venmo, Cash App payments. It needs to be a wire transfer or certified funds. The ACH is kind of, I think when you go in, if your bank has a bill pay feature, to send the funds that way. That's not considered good funds under the statute or certified funds because they can be recalled. The cashier's check and the wire are the methods with which we can collect money as good funds to be able to disperse to all parties.
Yeah. Okay, so let's talk about split closings a second. We have a question here. So how much time is needed in between the closings for the seller to leave with their funds? Also, does a late Friday closing affect the seller getting their funds?
Definitely. If they close late day on Friday and there's funding authorization needed, it almost invariably takes longer strictly because the lenders are under the same pressure as the title insurance industry. For as long as I've been in this industry, everybody wants to close on Friday. The volumes on Friday are 2 and 3 times what they are any other day of the week. So yes, that can affect how quickly we can get funding approval and how quickly funds can be released. There's not really a strong rule of thumb. It kind of depends on the situation. Again, if we're closing with a lender that doesn't require funding approval, that can move much more smoothly. If we're closing with a lender that does, then that can take a little bit more time. So unfortunately, there's not a real hard and fast rule for that. It depends on the situation. And I would advise you to talk to your closer about it when you're scheduling. They at that point will know who the lenders are and what those conditions are going to be if that's a real challenge that we're going to have if it's late day Friday getting funding on something. We can do wires. Deb, what's our wire cutoff now?
Our wire cutoff is 4 o'clock. The Federal Reserve closes at 5.
So if the customer wants wired funds, if we have all this together by 4 o'clock, we can get it ordered and it can be sent out and delivered the same day.
Yes, if we have the proper wiring instructions, and we'll talk about that in the next, coming up, but we need to have the accurate wiring instructions because all funding that is sent through wires are verified.
Any other questions about scheduling, split closings, the closing process in general? Okay, we will have time at the end as well, just for general discussion. If you guys have anything you think of throughout the presentation, just know that we do have time allotted at the end to be able to have those conversations. Okay.
Now we'll talk about the post-closing and recording. So this is probably one of the parts that agents get excited about because this is going to tell you guys when you get paid. So after the closing occurs, your documents, your closer will normally provide copies of the documents, and then for the actual people, either the buyer or the seller that they're working with, and then they will also, depending on what type of closing it is, for 5-star agents, we have an internal process that we have 5-star wants us to follow, where we will actually upload the documents into Dotloop, and then we will send copies of your checks. We upload those also into Dotloop, and then those are sent directly to 5-star. And 5-star will then process your commission. as far as if the seller requires, so if the seller requires their funds to be wired, the closer will work through the particular document that is needed. But the seller must fill out, there's a start title document that they will complete and sign. And then we also require either a copy of a voided check. And a lot of people, obviously, as you know, nowadays don't have checks. So we do also require the instructions on bank letterhead. That is not only to protect the customer, to make sure that their funds are going to the correct place, but it also, helps eliminate wire fraud, which is obviously on the rise right now, especially as we go into the holiday season. And the account must be in the person's name. So for instance, if we are selling something, again, our example is the Jane Doe Trust. There has to be a bank account in the Jane Doe Trust. So if we're issuing a check or a wire, we have many times where somebody sells it, they'll sell it in the Jane Doe Trust, and then either at the closing table or a couple days later, we'll get a phone call that they'll say, hey, I don't have an account in the trust. Can you just make my check payable to Jane Doe? And that is something we cannot do. The funds have to be issued in the proper name. Same will go if we are selling, so say the seller is Mary and Joe Smith, and the account that we are provided only says Mary Smith on it. We do have to legally verify with the other spouse to make sure, are you okay with these funds just going into this checking account? So those are all things that we have to verify, even with wiring or printing the checks, to make sure that they are made payable to the correct parties.
Deb, the only thing that I know you and I have spoke about this, and we've had people ask, getting the instructions on bank letterhead. A lot of people think that's complicated. It's really not. And in this current environment where your bank is changing hands every 10 minutes, people can come in with checks that were 3 banks ago, and they've changed some of those routing numbers and things. And that just delays things on our end, because if those are no good, we have to reach back out to the customer. Sometimes Deb does conference calls with their bank to get that correct information. But getting the wire instructions on bank letterhead is just simply reaching out to whoever your contact is at your bank and asking for it. They're used to it. And honestly, I think they prefer it now, just because all of us are trying to combat wire fraud.
Correct. And I know if you basically have a seller and they are going to request their funds wired, if you just let them know, go into your financial institution, let them know that you're selling your home, you want their funds wired into their account, and can you provide me that document? They actually already pretty much have them typed up. It's a template, and they add the information in for that particular person, and then they would bring that into. They can either send it in to us through their agent support person, or they can bring it to the closing table, and then we will make sure those funds are wired. If the customer does require request a wire, we do charge a $25 wire fee. That's honestly very common with all title companies. Their bank may charge them a fee. We honestly don't know. Each financial institution is a little bit different. So that's something that your seller is going to want to ask their bank if they're going to be charged that additional charge.
Yep. Deb, we have a question here. So what if the seller is named in the operating agreement as being able to sell the property? Would proceeds need to be issued in the name of the LLC then?
Yes, the funds still need to be issued even though that person can be a signer on it, the funds have to be issued in how we're selling the property. So if we're selling it as an LLC, the check is made payable to the LLC.
Okay.
Hopefully that answers that question.
They've actually created a separate legal entity, whether it be a trust or an LLC. I've heard a ton of times that, but it's my trust. Yes, it is, but you've created a separate legal entity that stands alone. You do that for liability reasons, and that flows both ways, unfortunately. So if you get the protections of having your property into a trust, there's also the necessity to have the proper accounts in place to deal with any assets of that trust. And LLCs are very similar in that structure.
I just like to add something. So when you get your commitment and you see that, you know, it's in the trust, it's in the LLC, you know, you might want to reach out to them and say, you know, your check is going to be issued, you know, to that
Entity.
entity. So, you know, do you have a bank account? If not, you know, you might want to start setting that up right now.
Right, and we do, I know through the agent support, so normally the practice is, once that order comes in, agent support does work on that communication to verify those type of things, because our goal is to obviously catch that in the beginning and ask people, especially when there's a mail away. So we have a lot of questions, you know, we have a mail away, how does this person get paid? And so that's something that we have the agent support staff that you're working with will definitely communicate and ask those questions and ensure that by the time it gets to the disbursement stage, we've got what we need so that there's no delays. Because there, you know, obviously, as you guys know, there's nothing more frustrating to a customer when they sold their house and then they have to wait for the proceeds. It's something that, you know, they've sold it, they want their money as soon as possible. And then as far as water bill escrows, so what we at Star Title, we will hold $200 in water in escrow account if the property is connected to public water and sewer. The reason that we do that is, I'm sorry. Oh, I apologize. I heard something.
I heard that too.
The reason that we do that is it is the seller's responsibility to obtain a final water bill and to ensure that water bill is paid so that it does not become a lien on the property for the input for that new buyer. So what we will do, and the customers are told this at closing, is they kind of have a couple of different options that they can do. They can pay the bill themselves, and then they will send a copy of that paid bill to Star Title, and we will refund those monies to the actual seller, or they can send us a bill, the bill itself, we'll pay that bill, and then we will send them the difference back to them. If the bill exceeds the $200, then we will, what we've done is we will pay, for instance, City of Grand Rapids. We'll pay the City of Grand Rapids the $200, and then the City of Grand Rapids will obviously, you know, expect the remainder of the payment from the seller. So this is just kind of something that we implemented this about 2.5 years ago. The main reason for it is we were finding so many times that the sellers weren't paying their final water bills. And even though it's not technically a title responsibility to ensure this is done, we were finding that, you know, as agents were getting a lot of calls, you know, what do we do? They didn't pay their bill. So that we implemented this, and it's actually been working out very, very well. So in the long run, it's, you know, helping all parties out.
I think I do want to give probably our favorite, Deb, right, example of this, and I'm saying favorite sarcastically. But we had a deal, and this was years ago now, and there was a fourplex. It was a rental property, and there were so many water accounts from prior years that had just not been paid and not been collected, and, you know, this and that, totaling, it was an absurd amount of money, like maybe just north of $2,000. It was a lot of money in just old water bills that nobody ever paid. The tenants didn't pay. And that stays with the property. So where we might think like, yes, it is somebody else's responsibility, it's really going to become whoever's problem. If you sell the property, it's that new owner's problem. I mean, if the water gets shut off because of delinquent bills, sorry, you got no water. So that was, that's the most, I think, severe instance that I've come across where I was just like, holy cow. It can be quite costly.
Yep. I do see we have one question. Is the water bill escrow a requirement on all transactions that are connected to public utilities? So we will collect that $200. If we have a situation where an agent comes to us and says, I don't want the $200 on there. My customer, is just very upset about it, and that type of thing. We will remove it, but we will send an email back to you as an agent that basically is going to say that you've requested Star Title to remove this $200 escrow. We want to ensure that you understand Star Title is not responsible for this final water bill if it does not get paid. And that's honestly to cover us. If there's an outstanding current bill due, that's going to be part of the closing. But if the seller, if we don't hold that and the seller then for some reason just decides not to get a final water bill, or not to actually even put the water in, take it out of their name and put it in the next person's name, we just need to make sure that we as a title company aren't going to be responsible for that. So yes, that can be removed. We just will ask for documentation so that we have it in the file. And then as far as disbursements, so if we are the dispersing agent, once all the closing documents are signed and funds are received, the file then goes to our post-closing team and our recording team. And what they will do is they will review they do a cursory review of the documents, make sure they were signed properly. They will send the appropriate documents back to the lender or mortgage broker. They will ensure that if we're dealing with, for instance, a 5-star agent, they will ensure that the documents are, the appropriate documents are uploaded into .loop and the commission check is issued. If it's a non-5-star agent, they will make, if the information was not given out at closing, so, back before the pandemic, we used to, a lot of times the buyer's agent and seller's agent would be there. If it was a non-5-star agent, that agent would leave with with their closing package and their check. If all items had been met, we had funding approval, things like that. Now we're starting to see more agents coming to closings. But in the event a non-5-star agent is involved and they did not get their check-in package at the closing table, then those are prepared and then sent to them UPS. And then, we want to ensure, so if it's a mail away, there could be a disbursement delay, and we'll say up to 24 hours. The reason for that, it's going to depend on honestly when we get the documents back. So that's why we will deal a lot with overnights. We'll have documents scanned back to us to make sure that we have them. We are really striving to have, especially with mailaways, to have funding, cash to close sent to us via wire versus a check, so that we have those funds. We can verify we've got the funds. We can have scanned copies of the documents, and then we're able to disperse. If a lot of times, if they're not doing a wire, we can't, basically we're not able to disperse if we don't have the money in, for that exact file. And then funds that are owed for payoffs, municipalities, taxes, utilities, those type of things, those are all issued in the post-closing area, and then those are normally sent out, depending on if we're given a physical address, then those are sent out by UPS. Unfortunately, sometimes what we are finding is a lot of people have been using PO boxes. Again, during this last couple of years, they've switched over. Those are a little bit more challenging for us because we have to send those US mail. We don't have an option. And then what will happen is we're kind of at the mercy of the US Postal Service to ensure that everything's received in a timely manner. Does anyone have any questions about how checks are issued or anything before we move on to reporting? And if not, again, we'll watch the chat box and we can go back to that. So when we talk about what's an original, so there are various documents, especially with our great copy machines nowadays, that look pretty darn good. When we are talking about a death certificate, so a death certificate, most county documents will have a raised seal or a wet signature, and they'll also say court certified. So if we are dealing with letters of authority, death certificates, things like that, those normally will get rejected from the county if it does not have a raised seal. So we do tell people, please make sure it's, it has that, because we don't, the rejections can just it slows down the recording process, and we want to make sure that all the stuff is transferred in a timely manner. Certificates of trust, letters of authority, power of attorney, death certificate, those type of things, as you know, would be court documents. Your title commitment is going to reflect on there what is needed for recording. So if we go back to, for instance, any of these court documents listed, your agent support person will ask you normally for a copy of it so that it can be reviewed ahead of time and make sure it has all the appropriate information that we need. Then they'll tell you, you can either send the original in to us ahead of time, or it must come to closing. And that is very critical that we have that, because if we do not have those original documents at the time we are trying to record, we're at a standstill. We have to have those originals to record.
One thing I want to touch on just really quick, and I think we get it sometimes from sellers, where some of these documents we're asking for, they are private, right? It's personal. It's dealing with somebody's family member, or, and sometimes it's not that long ago that someone passed away, and it's, it can be a sensitive topic. Right. So one thing I do think is important is to have that open line of communication between the title company and the customer, so we can explain, hey, we don't like to record. We don't want to record somebody's entire trust agreement. This is why we're asking for the certificate of trust. Trust agreements have a lot of personal information pertaining to various aspects of a person's life, and certainly don't want to record that. Same with letters of authority. It's we understand somebody passed away, but we have to make sure that, the court, did sign off and say, hey, you can sell the property. Death certificates are another one. So I think we want you as an agent to lean on us, because we know that these conversations can be uncomfortable, and sometimes sellers might not understand why we're asking for some of this stuff. So we're happy to explain it to them, and certainly if you have a seller who's like, I'm not giving them that, I don't want to, I don't have it, that kind of thing, so send them our way. We're happy to to talk to them about it.
Yeah, definitely. And a lot of times it's much easier. And we know, as far as you guys as agents, you guys are super, super busy. So we have absolutely no problem communicating with the buyers or sellers at any level. You just need to, let us know that you're okay with us doing it, and we'll take it and run with it. So this we touched on a little bit, but again, so normally the customer will receive copies of the closing documents if they're available, but they do also have an option to request them via email. And if that's something that they want, then they're just going to let their closer know. Then their closer is going to communicate that to the post-closing team. We usually just want to put a little caveat out there that if the customers do want them sent via email, they do come secure. So they will have to log into a secure website. So we want to make sure that, they understand that. And then as far as the agents, so again, if it's a 5-star agent, then those documents are uploaded in the dot loop, and we will send checks over to 5-star directly. And so and if it's a non-5-star agent, they leave with their agent package at closing. So, and again, this is something that we work out with 5-star so that we can ensure people are paid in a timely manner. And then the other, we'll upload in the dot loop the agent package as well. So if you do need to go, if you're looking for a copy, you can pull that out of dot loop and print it out. So whatever's going to work best for you guys, we're here to help you guys. And then again, commission. So we will issue commission checks out. And one thing I know the question has come up before is we'll get an email, from an agent that says, hey, I haven't got my commission, what's going on? So what we do is, so we will send the documents over to 5-star, we'll send the checks. There may be something that 5-star themselves are waiting for you as an agent to provide to them. So always, kind of look at your dot loop and see if you have any messages from them where they may be looking for a particular document that possibly hadn't been uploaded yet or that they missed. And then if funding approval is not received and we've closed an escrow, commissions and copies, those will be provided once we have permission to actually disperse. So copies, funds, everything is pretty much on hold until we have the criteria met that, that we were waiting on to close an escrow, or if the question came up about, for instance, a Friday closing. So 4 o'clock on Friday is like the prime time everybody wants to close. What will happen sometimes is we may have a buyer that signed a split closing. Buyer signed at noon, seller signed at 4 o'clock, and the lender may be waiting on a couple of documents that the seller has to sign. So what the closer will do is the closer will complete your signing. They'll scan those documents immediately over to the other title company to either say, hey, you're good to release checks, or it's going to be a few more minutes. So our goal is to have people leave with their funds. So we're going to push it and do whatever we have to do to that, so that they do leave with funds. But unfortunately, again, depending on, sometimes we are at the lender's mercy. And we've even had it before where, they'll have 5 or 6 closings and we'll try to contact them. And for some reason, the lender decides to go home at 5 o'clock. So, we try to stay ahead of that so that, the parties are leaving with their funds.
All right.
And that's what we've got for now. So we'd love to hear any questions that you guys have.
Is there anything that we didn't cover that you'd like to go over? Maybe you're dealing with a situation now currently that you've got questions about too. We're happy to help with that as well. So feel free to use the chat. If you think of something after the fact, you will get an email with with our contact information, certainly. And you're going to get a copy of this presentation along with, we have a really nice handout actually from one of our underwriters that kind of goes over the differences between various types of policies. So I'll include that as well. It's just a really nice checklist that kind of offers a nice visual. So it's easy to tell the difference between the policy types. Okay, so what are some examples of liens or assessments that would not be a public record?
Well, I can answer part of that. So if there was a divorce, that husband can have a lien on the property. That divorce isn't a record. So, and that's one of the reasons that we're, asking for that copy of divorce.
Okay, and then follow-up question to that, how would they be found if the agent is on the buying side?
Typically, it would be seller side and part of that clearance. But again, that's why if we suspect there's a judgment of divorce, we'll ask for it so it can be reviewed. There can also be the attorney that handled the divorce action will sometimes put a lien within the judgment of divorce. Even though that divorce is at the county clerk's office, it's not necessarily been recorded at the Register of Deeds office, which is the body of records that pertain to title insurance and what we do. So again, I can't stress enough to everybody, if you suspect something, if you have a gut feeling about something, please share that information with us, because we can check the records and see if there is one. Sometimes I worked with a client fairly recently where he was selling property and someone had died and hadn't really shared that information. We just discovered that when he didn't show up at the closing that he was dead, and the person who was selling said, oh, but I was supposed to get this property. Yeah, but it's got to be transferred, and it's horrible when we have to go back and try to figure this type of thing out. Gosh, unrecorded liens, people can have private mortgages and things like that they don't place of record. Typically, that's something that has to be addressed if we find out about something. But again, it could be so many things, and instinct is very important in this business. I know as a longtime title examiner that you just sometimes will get a feeling about something and follow that instinct, because a lot of times it's right.
And ask questions, because there could be an unrecorded land contract, and that's somebody's interest. That's my train of thought.
Now, the unrecorded land contract is a thing. That's a lot of times you'll have a seller who, that's when you find out that the person that wants to sell the property isn't the person in title, and they'll say, oh, I have a land contract on this. So again, that's legwork that we like to do sooner rather than later.
And the seller can have a dispute on the property line too, and there could be litigation going on that. So whatever information the seller divulges to you, relay that information onto us so we can take care of everything and our closing goes smoothly.
Yeah, and I think just a general statement about that is we can't address things that we don't know about. So when we talk about things that are not recorded or not a record, it's we're really relying, on a seller's honesty at that point. So when we get to the closing, they do sign things. Hey, I'm acknowledging that there are no outstanding liens or whether it's a mortgage or whatever it might be, that there's nothing outstanding that would hinder the property going forward. In the same breath, we take exception to maybe whatever that might be. So it's hard to pinpoint what might come up, but that's why we do kind of take the general, we make the general statement that we can't insure something that's not of record and that wasn't disclosed to us.
Well, and we've actually even had it, I don't know if anyone on the call has had this happen, but we've actually found out about things actually at the closing table where, we'll be sitting doing a closing and there'll be all of a sudden somebody will say, oh, well, they'll start talking amongst each other. Oh, well, we have this loan out here that nobody knew about. So when those type of things happen, we basically need to, I don't want to say stop the closing, but we will, if need be, stop and have to do some research, because we want to make sure, as far as liability, that, everything's covered.
Yeah. How rare are actual title claims from a policy that was issued? I mean, that's what. Oh, go ahead.
It kind of varies as far as if there's actual claims. I think most of it, honestly, any claim that I've ever really seen over the years, there's a lot of if there's easements or, where somebody thought they could get in onto a particular, there's two parcels butted up against each other, and they could have had that handshake deal where, yep, my driveway's here, I could always go there. Well, it's been okay for, 50 years. And then somebody else is buying it, and the other party is like, oh no, that's, there's nothing of record. So it's like, now there's an issue because they can't get on their property.
Yeah. I don't know that we can speak to the frequency, because that's from an insurance standpoint, that's what we're trying to avoid. So them being rare is good for us and good for everybody else too. We don't want that to come up. It's certainly there. I mean, it's insurance for a reason. So if something were to come up, in the future, and the buyer says, hey, what happened here, that kind of thing, then, if we can't figure out a solution, I mean, we're all human, right? We do make mistakes, I'm sure, but I just, I think that the more rare, the better. So
I believe the last numbers I saw, and I think they were for a year ago, national average for underwriters was 11 to 13%. And that's really actually quite a lot when you stop and think about it.
yeah. Anything else you guys can think of? All right. Well, I don't want to keep anyone unnecessarily. I know you guys are busy, but again, thank you so much for, being here with us today and participating. We will get, again, the copy of this presentation out to you along with our contact information. So please feel free to call us anytime. If you have something funky that comes up that, you just need to talk through, feel free to reach out to us. We're here Monday through Friday, 8:30 to 5. So we'll be here for you to answer any questions. So thank you again, and have a great rest of the day, everyone.